It's time to bring accounting into marketing. So, do marketers and accountants need each other? And the answer is yes, they do. A lot of people think that marketing folks being creative and I think it's more right-brained are just vastly different than accountants who are more analytical and stodgy and not fun and more left-brained, so to speak. And reality is we need each other, right? So. What's up, everybody? Chris Hervochon here, betterwaycpa.com. If you have any questions as I'm going through this, by all means, please ask. This is a live recording. If you're watching it on a recording, feel free to add some questions to the comments, and I'd be happy to go back and answer those later. So, the goals are the same between marketing and accounting. Profitability and consistent cash flow, steady growth, increase the value of the business, and data analysis. Okay. So marketers are generally focused on bringing in revenue to the business. So that's top line. While accountants are concerned with the same thing, right? But we're just concerned with more so with the bottom line. So everything that happens between the top line and the bottom line. Revenue is the top line. When you subtract your cost of goods sold, your expenses, all the things that go into actually running the business, that eventually gets you to your bottom line. So accountants are worried about that as well. We're worried about the whole picture, really. And, but the idea of marketing is to increase that top line, which theoretically is going to increase the bottom line, results in a bigger benefit, so cash flow benefit or valuation benefit to the business owner. That's where we get into increase the value of the business. And we want to do this over time. So we want revenue to be increasing over time. We want the net income to be increasing over time. We want the value of the business to be increasing over time. We want cash flow coming out of the business. So it doesn't matter if you have revenue, if you don't have cash that goes with it. We need both of those pieces. But accountants are focused on both of those things, and marketers should be too. So we want to see all of those things continue to grow over the course of time. Hopefully those things are growing steadily. Less volatility is better, but not always the case. But that's what we're looking for. Now, data analysis is kind of a different animal. So accountants are getting to be more and more focused on data analytics. It's just the natural progression from accounting. Well, the same thing's happening with marketers too. So now we see all these social media platforms. We see all this data availability that's available to marketers. Think Google Analytics. You see all that website data. Just right now, we're on YouTube. All the YouTube analytics that come along with this is a marketing video, right? So all the analysis that comes with that, all the analysis that comes from Facebook, Twitter, all those things, those all help to inform marketers. Well, there's tons and tons of data out there, and accountants are well positioned to be able to take that data and analyze that data because we've been doing that for eons. It's just that the means that we do it by now are just a little bit different. So, all of those things kind of make sense. Marketers need to be focused on data. So do accountants. There's a natural marriage that should happen there. All right. So accounting for marketers. So how can accountants help marketers? So monitor trends in the business and the broader industry. So accountants need to be focused on not just what's happening in the business, but what's happening to similar businesses and within the industry so that we know what seems reasonable. That's one of the reasons. We need to know, what's going to be happening on the outside that's going to affect the inside. So accountants a lot of times are looped into preparing forecasts and budgets and things of that nature. Well, if we know that there are big, and you hear me talk about this all the time, hard trends and soft trends. If we know that there are these big hard trends that are going to be impacting the business, which are future facts. So data, the quantity of data, that's a hard trend. So if we know that there's all these things that are going to be impacting the business, then we need to be forecasting for that. We need to be including that in our forecast. When we go and present financial information to management, we need to say, well, these are the things that could potentially impact these numbers going forward. These are the things that are going to impact this forecast going forward. All of those things. Efficiency. So how efficiently is the business operating? So for every dollar that we spend to operate the business, how much money or how many dollars of that is turning into revenue? How efficiently are we managing that? Or are we properly staffed? Are the dollars that are going into wages and benefits, are they turning into an efficient management of the business? Those are all things that accountants are worried about, and that things that we consider as we're doing our job. So financial reporting, this is basically my favorite piece. So what we do is we gauge profitability. So one thing that marketers need to be looking at is how profitable they are by client, how profitable they are by industry. Those things inform your pricing. So that's a couple bullets down. But so if you've got a client who is of a particular size, operates in a particular industry, has particular needs, wants, when you service that client, is that client profitable? Now, if you have another similar client, is that client more profitable or less profitable than client A? So client A is 3 people and they operate in the construction industry, and you provide them with just, Facebook advertising. Now, client B, you provide them with Facebook advertising. They are in the food and beverage industry. There are 10 people and, similar revenue between the two businesses, but they are more profitable than client A. Well, if we know that one industry in your marketing agency is more profitable than another industry, maybe we need to look at consolidating and focusing on that one particular industry that's more profitable. Maybe we need to start asking the questions of, well, why is that client more profitable? Why is that industry more profitable? So we need to look at it not just on a by client basis, but on an industry basis as well. So that can help you to niche. If you are niched, if you know everything that there is to know about running Facebook ads for construction industry, and you are the go-to person for that, you're the go-to agency, you've got people in your agency who are just really, really good about that, well, then you can charge a higher price because you are going to get a better return for that client. Okay, so monitor sales trends. So what does your top line look like? Again, so is it going up? Is it going down? What's it look like by client, by industry? Manage the cost of marketing and advertising. So that gets into ROI, return on ad spend, client profitability, industry profitability, all of those things. Informed pricing, we already talked about that. Cash flow. Now, cash is the lifeblood of the business. Does not matter if you have revenue if you do not have cash. So a couple ways to manage that are, well, let's say that you're a Facebook ad agency and you are getting, the industry standard 15% on ad spend. That's your effectively your commission. Is that enough? How do we know if it's enough? If you're going to run $100,000 of Facebook ads for a client and you're going to get a 15% commission, and you're going to bill them every month, but you ran $100,000 that month, you're going to bill them on the last day of the month. Your terms are net 30, so you're going to get paid a month later. Now you're out that $100,000 for 2 months. Okay. And then let's just say you're going to allow them to pay on a credit card. So they pay on a credit card, that's $3 off your top line, so that's cutting into your 15% commission. All these things kind of lead into cash flow and profitability. So 2 things there. So those are the kind of things that you want to be thinking about. Maybe you haven't been thinking about, but an accountant can help you with that, right? These are the kinds of things an accountant's going to look at. So, the solution there is maybe you bill up front. Maybe you adjust that 15%. Maybe you only take bank transfers to pay for transactions that are over some certain amount to cut down on what you're going to pay in credit card fees. So that increases your profitability. That front loads your cash flow. And so you're not out of pocket $100,000 for 2 months. And that 15% that you thought that you were making, you're really not making that, because now you got to go and get the line of credit from the bank, which is going to incur interest just to float yourself for those 2 months on the $100,000 that you missed out on by not invoicing up front. So all of those things, those are the things that we think about as accountants. And it's very complementary to how marketers work. Okay, and final point here, we already talked about data analytics, but the point above that, marketers are strategists for their clients, so are accountants, right? And that gets into what I was just talking about. But marketers basically, a lot of them, or they should, view themselves as strategists for their clients. So what do I need to do and how do I need to do it in order to get my client that next dollar of revenue? Okay. Accountants need to be thinking of, what do I need to do for my client to advise them on not only how to get that next dollar of revenue, but how to turn that next dollar of revenue into, as much cash as we can coming out of the business. So all that to say, I'm going to talk about the Wayfinder now a little bit. So Wayfinder is one of the services that I offer. And what it is it consists of a 1-hour fact-finding introductory call where we sit down and we go through your business. You tell me about your business, learn about the industry that you're in, and learn about your clients, and learn about your financial workflows, the things that you're tracking or not tracking, how you service your clients, how you're getting paid, what your margins are, all those things. And it's a pretty exhaustive list of the things I go through, but we're not going to go through that here. That then turns into an 8 to 9 page benchmarking document that I then present to you in another 1 hour meeting. We walk through it. So basically what the Wayfinder is it's a plan. It talks about the environment that you're operating in, both from an industry perspective and then also from an economic perspective and a geographical perspective. So what are the things that are happening around you that are impacting you? Hard trends, soft trends, the economic environment locally, nationally, all of those things. Then it talks about benchmarking. So what does your industry look like? How do you compare to your industry? And what different facets of your business are out of whack or maybe better than your industry? And what does that mean? Then we get into the financial processes of your business. So, how are you invoicing? What does your general ledger system look like? How often are you closing your books? All the stuff like that goes into actually putting together financial analysis for your business. What does your process look like? What do best practices look like? Where is it different? How can you get better? That in turn turns into KPI development. So what should you be managing in your business to walk you through the 4 pillars of business strategy? The 4 pillars of business strategy are customer sales or customer acquisition and sales, financial strategy, people and culture, and risk management. So where is your business in that life cycle of moving through those 4 pillars? And then what KPIs can we develop around that in order to track your business? So what are the KPIs that you can affect to move your business from the business that you have to the business that you want? And then the final piece of it is next steps. So the Wayfinder is a plan. An outsourced accounting engagement is the implementation of that plan, but that's a discussion for another time. So the Wayfinder can be used for marketing agencies and it can be used for marketing agency clients. So it can be used for you as a marketer and then your client. Okay, so we can do this analysis for your client, and then that would be us working together in order to provide a higher value service for your client. Because remember, marketers are strategists, accountants are strategists. We come at things from different angles, but those two angles that we come at it from are very, very complementary. And then the other thing I'll say about this is I've got a demo Wayfinder out on my website. I'm going to have one specific for marketers out there probably today or tomorrow, but the link to that will be in the show notes. So, marketer pain points. Number 1, marketing professionals are often right-brainers, right-brainers, I got that right. Right-brainers more interested in the creative process than the accounting part of their business. So, essentially what this says is you do good work, you do good work, your client knows you do good work, but when you go to pay the mortgage, the bank account says maybe the work that you do isn't so great. That's not true. It's just the financial reality, right? So, basically, accountants can help marketers become more profitable and figure out where the dollars are going, how the dollars can get better, so to speak. Financial management is the missing piece of that whole entire puzzle. So if you do good work, you've got plenty of clients. Your clients know you do good work, but it's not reflected in your bank account. Then financial management is the missing piece of that puzzle, and that's where an accountant can come in and can help you. So pain point number 2. Marketing agencies always have to prove their worth. So this gets to the point of clients don't maybe value your work. They don't understand what you do. They just know that they have a marketer and the marketer's doing marketing things, and it's just like, who knows? So I mean, think about it. If you own a restaurant, you were probably taught how to run a restaurant. You weren't taught how to do marketing. It's the same thing that goes for accounting. People don't get into the restaurant business because they know how to do accounting. It's just not how it works. So people stay in their lanes. They don't necessarily understand the lanes outside of their own lane, but they know that they need them. So what you need to do is you need to be able to communicate your value to your clients. So how do you do that? So here's how the Wayfinder can help, bringing it back around. So solution number 1, it gives marketing agencies a snapshot of how their firm stands up to the industry. So if we know that a marketing agency of your size, say it's $500,000 in revenue, generates, and I'm making these numbers up, but $250,000 in gross margin, and then the net is, I don't know, call it $100,000. Well, if you fit into that bucket or near that bucket and $100,000 is not what you're seeing, well, then we know that there are problems. We know that there are other agencies that are operating similar to you as far as bringing in clients and bringing in revenue, but they are just, beating you to death on how they manage their business financially. They just do a much better job, and they see a much bigger benefit from their business than how you operate yours. That's a piece of the puzzle. So the Wayfinder can help to identify how you stack up against your industry and where you need to get better. So we talked about KPIs, we talked about benchmarking. Those two things together will help you to figure out how to get better, where to get better, and how to move your business into the business that you want. So Wayfinder solution number 2, clients can benefit from the Wayfinder because industry research, benchmark setting, data analysis are all part of what marketing does anyway. Totally true. And this goes back to the fact that accountants and marketers have the same focuses. Well, not the same focuses, but the same goals. They have different focuses on how to reach those goals, but those two things are very, very complementary. Okay. So, wrapping up for today, but a final Jack Handy deep thoughts. That's the SNL reference. But marketing and accounting have a symbiotic relationship. They go together. They're like peas and carrots, peanut butter and jelly, all that good stuff. They're very, very different, but they're also, focused on the same goals. So marketing is trying to achieve a financial result. So too is accounting. Marketing is generally trying to achieve a top line result. Accounting is generally trying to achieve a bottom line result. And those two things, they work together. You can't have one without the other. And accountants can help marketers not just with closing the books, but with strategy development, data analytics, and quantification of important business metrics. So that gets into the data analysis, the KPI development. All of those things can help marketing and marketers. So the resources for today, here's the link to there will be a link to this YouTube video. These slides are going to be out on SlideShare and Google Slides as always. That's the link to the Wayfinder page. I will have a demo Wayfinder for marketing agencies specifically up on the website either today or tomorrow. There's an interesting article which kind of precipitated this entire video, which is this Econsultancy article, Marketers, It's Time to Grow Up and Start Talking to Finance. Now, this comes at it kind of from a corporate perspective. I spent a lot of time in corporate accounting and finance, and I will tell you that as I was putting these slides together, I could not think of one single time when I had any sort of substantive conversation with a marketing department ever, which, kind of goes to the point of this article. And it's ironic now that I serve a lot of creatives and marketing agencies. So it comes back around. And then there's 2 Quora articles here, which I wrote, which reference the Wayfinder, but also talk about some of the things that I talked about in greater depth here. So as a small business, how do you determine which cost to focus on cutting? That's part of the Wayfinder too. And that's what I talked about as far as benchmarking that top line and how other agencies might be performing better than you are just because they manage your business better financially. And that second article there, what are some great questions for a client strategic planning session, to speak specifically to how the fact that accountants can be strategic planners too, as are marketers. Those two things work very well together. So that's it for me today. Let's connect. Chris@betterwaycpa.com. 843-608-0298 is the phone number. You can find me on Facebook, LinkedIn, Twitter, Quora, Instagram, and Pinterest. So basically everywhere. That's it for me today. Thanks for watching. If you like this video, please like it and share it. I really appreciate that. It helps me to grow my channel and get more views. So I appreciate that. Thanks, and I will see you next time.